Hello family, I hope you had a fantastic week. This is the weekly forecast, so let's get them. In this video I'm going to go through my entries, target, stop losses and the risks that I see for this next upcoming week. I also going to go through some seasonality and some COT reports. Trading Forex is risky, not appropriate for everyone. Past performance is not indicative of future results. Whatever I'm saying here is only for education purposes, not financial advice. So let's go. As per requested, I have turned off the ads, so watch until the end for the YouTube algorithm. So, what is left to do? Let's start off with the DXY. Did you remember this?
We have here up here that we have said 93 and 93.13 is the best sell prices we can ever get.
And look where we are right now. Isn't that fantastic? That's amazing if you ask me. So we have now fallen, give or take, 226 pips since that video was made. As you can see out of the seasonality, we were expecting dollar to fall, and here we are. As we are now coming towards the end of the DXY, we have 30 pips left to our target. It can fall further, it can go back up again. So now the book of opportunities just open up a bit more. As further down we come, the more risk it is for this one to go in all kinds of directions. But I'm still going to look for dollar to go down anyways. If we look into the Australian dollar and this,
we have here the Australian dollar, US dollar. So this is the best price you can get. Did you buy it on Friday? I told you guys. Did you guys buy it on Friday?
In that video, we were in this area here. And as you can see, we have risen, well, 140 something pips ever since. But it hasn't been easy. It hasn't been great. And I would also stress out, this is not a good trend. This is a range. This is mediocre trading. So once you now come into this level here, I would say as long as it's above 77, I'm still very much okay with it. But what I'm not okay with is the retail traders and their positioning in Australian dollar, US dollar. 66% of them are already short. And in this market condition, I don't understand why they would be short here. Can you please tell me why you would short a range to a bullish market? So coming in for landing for this week, I would say as long as prices be above 77, I would target 78.40. I would look for on the smaller time frame, maybe some higher high, higher lows, and then continuation higher. This area here is considered to be support, great, but I do not want price to be below here ever again. It's still a range, so I'm not going to be aggressive. I'm not going to be trading these a lot, but if it goes higher, I will be okay with it. If you don't have an entry down here, leave it alone if it comes down there again. Because I know from around 14th to around 20th every year, it tends to starts going bearish again on the Australian dollar. So if we turn lower, I am definitely not going to be chasing it lower. As you can see for the Australian dollar COT report, we have traders taking the long position off, we have a short position taking off, but this is a totally more bearish turn. You'll also see we are mostly 50-50 on the longs and shorts. So it's a very sideways market. As you can also see in lately, we haven't had that boost up in April as we wanted. We've even gone lower. Price action is range, and the hedge fund managers are not really buying the Australian dollar at the moment. So we'll just wait out then. Jumping over to Euro, do you remember this video? As we're coming into Euro USD, we have a reversal, higher high, higher low situation. We have 17.50. That is the buy price for next week. Boom. Already in the NFP meeting. So welcome back to the future. We are now turning higher. Yeah, 340 pips up since that time. Boom. You were there. You were here with me. Fantastic. Congratulations. If you just had a patience and discipline, and market has never been there ever again for the past 3 weeks. Should you have made a lot of money there? Yeah, you should have. Big banks on euro has been buying more, taking more profit, sending the euro up, and as you can see here, more demand coming in, more demand coming in. Fantastic. Just as what we were expecting. Coming into this week, I would be like, uh-oh, what are we going to do now? Well, I would say if it comes down to 2047, well, I would probably take it up, but I'm not going to be aggressive. I'm not going to be high lot size here. We're going to take profit. Yes! And then leave the rest up to the market. So what are we going to do for this upcoming week? I'm going to say 21.26 is my take profit, and I don't really care what happened after that. If that is hit, okay, then that is what we're going to do. If we do that just on Monday, okay, that is take profit, get out, whatever, and then wait for it to go back up again. I'm not going to take all of it out, but most of it out. So I will leave one order out from this time here. Okay. Yeah. I also posted a trade plan for Euro USD, and it seems like it already went. As we're coming into the hedge fund managers and what they're doing for British pound, we have buyers coming in, we have sellers coming in. Not really what I wanted to see, but we're still mostly bullish. And if you look at the current trend, we're not seeing the amount of buyers and the amount of commitment the hedge fund managers are supposed to have in this given time. The seasonality for British pound in April was that it's going to be high, and ending May pretty high. So me coming into this week, I am cautious. I know that we have this as support, and I probably want a higher low situation before I start engaging again. I would actually say this market is actually bearish because we haven't broken above 139, and we're yet to test this as resistance, but this is still technically what is likely to happen. But do remember, we have a bias, we are looking for bullish setups, so a move higher would be great. Coming into target is 40.5. Where will you put your stop loss? Well, put them where you are comfortably far away, 50 to 100 pips on this one. Lower your lot size and have more orders in to break even, more orders in, break even, instead of having big lot sizes and you risk all of it and you're dead. So turn into lower time frames, use support and resistance, higher high, higher low, higher high, higher low. And if it goes up, comes down again, well, then there's nothing more to you to do than to take a stop loss and move on to something else. I don't know if I said that we're going to be bullish on Japanese yen for April, but I do notice that I do remember saying that we are mostly going to look for some take profit, and sure, that has actually happened. Coming into the Japanese yen for April, we were expecting some pound strength coming in April, and we haven't really seen that. We have also seen the yen strength. Well, then it should then fall. We now have a lower low. I have always been true to my bias and said I want to look for buys. Now that we have a lower low, I am totally off. I don't really want to be trading this one as a bull, but if you are a seller, I'm going to help you out. If you're a seller on British pound, Japanese yen, I would say either at 1500 or 1550, 150.50, I would then look for shorts. You can take target down to 147.56, and there you go. If it just falls, take the pullback. If it just falls, take the pullback. either on 15-minute time frame, 30-minute, 1 hour, or 4 hour. It all depends. We are structured to the downside because we don't have any higher highs. We have resistance here, we have resistance here, and we have support here, but we do not have any higher highs as of yet. So until then, we cannot do anything of a bullish price action. But if we do get that, okay, continuation higher. So do you remember this video I made? But it kicked off the right prices on Friday. The other thing is, we also want a higher high, higher low before we start increasing our position size, until we start increasing our amounts of orders that we put into the market. So we're just in the trenches, but we're getting there. This video was made about this point. We have been in a range for quite some time, and then absolutely fantastic last week, and then we're coming into a range again. Now, how do you act in such a situation? Well, as long as you're still going higher, still going higher, still going higher, but it's a range, you're still bullish. We haven't broken any support, we haven't broken lower, so continuing higher, that's what we're gonna look for. As you can see, something just doesn't make sense. As you can see here on the retail traders on the New Zealand, 68% of them trading New Zealand dollar is short. Is this a market condition that is looking to the downside? In these market conditions, I would still be confident looking for higher highs, higher lows, and that's what I want to do this week as well. Up to 72.66 for this week. Stop loss below here, below 71.50. But also, for what you can see from the seasonality, April was supposed to be very good for New Zealand, and the results, not really as much as I would have one. Coming in for the New Zealand COT report and the hedge fund managers, there are still more longs than short this week, and also in general. But also, we have had a big fall and we have had a small correction here, but it's not really bullish as of say. So we haven't really seen the market taking the actions they were supposed to take for April. The US dollar, Canadian dollar has been, I would call it, a mess as of late. And we have spiked higher, we have spiked lower. But I would say this marks something very different. This is also what you can see on the CRT report as well, that we have now turned sellers taking profit and more buyers coming in. And we haven't really seen a lot of bearishness in this one, but it is still to the downside. So if I'm going to say anything whatsoever in this market condition, it is not a very favorable market. Maybe take another Canadian dollar, maybe against the Canadian yen. Yeah, maybe not so much. Maybe against the Canadian Swissy, maybe not. Maybe against the Euro CAD, no, not really. But against the pound Canadian, well, that seems like a really killer market at the moment, especially since pound is so weak and strong and Canadian so strong. That is where I would then look for to play out the Canadian dollar strength. So if you want to trade the Canadian dollar strength, you have to find a weak pair. So USD CAD and pound CAD might be the best option for you at the moment. Though it doesn't come without risks. Dollar is still significantly the strongest one. Wherever that is going, that's where generally they are going to go. But I'm also very wondering, why are we not falling more? Yet to see. But it's still tilted to the downside. I'm still looking for 23.80. Put your stop loss above 23.25. Put your stop loss above 25.30, and you're pretty good to go. If it goes higher, it goes higher. We don't know. We really don't know. But what we do know is we want strength in Canadian dollar. We're looking for it, and we might even get it. Coming into the US oil, we want this one to then go higher as well. And I would say that is definitely sell price to sell off. Definitely textbook in my book. This then I would say is still bearish as long as it is still below 62.50. I want this to go higher to support the Canadian dollar going higher. But if you look into the seasonality of it, April is supposed to be a good month. It's supposed to be a good buy. And if you look into the COT report, we are finding more buyers on oil. And as you can see here, price is going higher, and also on the net, we're going a bit higher again. All that combined, we are then going to be looking for buys. We are still wanting higher high, higher lows, and if we have a buy here at 61.27, we still want price to go above 62.37 and still going above 63.7 as you kind of continue higher. And it might be a good time to take profit around 65, let it come back down again, and then going higher again. So 2 orders, 1 long-term, 1 weekly, and see which one that will go the furthest. Welcome to Gold Diggers, right? Welcome, 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 Gold Diggers. Let's start off with some trading. What have we done here? It has been absolutely mad on Friday. Wow, that is madness. Market manipulation just to get out those who are a bit weak in their tummy. Thank you guys for liking my video last week, and a special thanks to Harold and to Ollie, and of course every single one of you. I love you guys. This is not a good trade, not a good price action, and yes, we were making higher high, higher lows until we make the low on Friday. Can that be a buyer price for this week? Yes, it can. We also have more buyers on the COT report, and why doesn't it just rise? As we all can see from the seasonality, it's going to be a difficult April, and sure, we got it. And is this maybe the time they will start falling again? I don't know. But as long as it's above 70, I'm still okay. So it just tapped into that market. Maybe we should be out by now. I do not like what is going to happen, but it's still technically higher. So don't blame me. Target is still up to 2,000. And we're just patiently trying to buy as long as it still is bullish. And if we are now going to visit down to 30 again before going higher, or visit 1760, let it go. Don't enjoy the fall. Don't join in the fall. And if you want to sell it, congratulations. But it's not going to be easy either way. I'm looking for buys. Seasonality wise, it's a bit difficult. COT report is supporting us. Technical analysis is difficult. So hang in there. Don't use a lot of risk. Don't use a lot of your account on this gold. Do something better. Maybe Euro, maybe Aussie, maybe New Zealand. But so much better trades than what we have going on here. Thank you guys for being here today. I will be live tomorrow at 19:30 GMT+2, 19:30 in the evening. If you're not, please subscribe. If you don't understand what kind of time frame that is, you will be notified. And until next time, have a good day.